Hey traders, Captain Jim James here. Happy Sunday. Hope you all had a great weekend. I've been slowing down the videos that I make as I want to see them play out either against or within video, right? Or whatever I talked about in them. So I just wanted to give an update video to my last one as to where we are. But before we do that, I want to talk about current macro viewpoint of our market. In 2020, in March, right, well, first of all, for 2 years, 2 years we've had an established trading channel, right? This worked since March 2020. Now, we created this trading channel. It's been working for 2 straight years. We had this major dip within this channel way back in March. And we've been trading within this channel for almost 2 years. Not quite, but year and 3 quarters, something like that, right? And we had one more major dip here in October. And we've fought our way back into the old trading channel. Now, I know that I should say I trust Elliott Wave, but I do question how far back you're going, right? Are you starting it way back pre-industrial revolution? Are you starting it in the industrial revolution? Did you start it in the 1930s? Often people don't talk about how we skipped a bubble period at the turn of the century due to the industrialization's effect on our stock markets around the world. And we're kind of in that same situation right now with tech, right? We have some big changes coming down the line with AI. We've got changes coming down with computing. We've got changes coming with exploration in space, new currencies. We have major changes to how our markets operate, modern monetary theory. We just had an epidemic that we've never experienced before. Everyone says, or I hear oftentimes, yeah, well, nothing changes, it's always the same. If you want to talk about it's always the same, then you have to look back towards the Industrial Revolution and how we did skip a bubble during that time period. I'm going to assume that some of you don't check that history. So anyways, my point though is that for the last 2 years, we've traded in this channel. And even if you were to say we're in a 5th wave or something, way back here in March, a lot of people were calling this the 5th wave or wave 5, right? That we were going to continue down and to the right. And meanwhile, for a year and a half, we didn't fucking do that. So how do you count the waves in Elliott theory or an Elliott wave forecast or whatever? It takes big computing, it takes lots of money, it takes software, it takes a lot of tools that most of us don't have to count properly. So I have a tough time with some counts that are out there, because I know that right now this is the thought, is that this is the end of a big wave, and we're going to roll over this way. But this over here looked like we were going to do it too, and we didn't. But what does count is that this trading channel has been respected for 2 years, almost 2 years. And we fought back to get into this trading channel in October. So we've had one major crash back here in March, and we just had a dip to these similar to these same levels. It's a little bit lower down here. I believe this was the 200, but this is deep. This is a deep correction that we just had, and we recovered. So when I hear people on social media talk about, well, this is oversold, the RSI is fucked up, the MACD is fucked up, all these things, I'm like, yeah, we just fought back from this correction back into our old trading channel. And all of a sudden, you've got people wanting to create this new trading channel that's trading below. And to establish that new trading channel is going to take a lot more than what I'm seeing in the news right now. And if you're a real bear, what you really want to be seeing for a bubble is something vertical. I got bears out here talking about this bad happening, that bad happening, market crash is coming, and that's all fine and good. But in reality, our institutions, right, our banks, our institutions, our politicians, our companies, they will run our markets, whether they be bonds or cash market. They will run them until they break. They'll drive them until they break. And if you're a real bear out there, you should know that. You should know that they're never going to tell you until it's fucking broken. And they're going to run it up at the end to get all their money out before they fucking break it or it breaks to the news. That's how it's always happened in the past. So if you're a bear out there, what are you trying to say? You're trying to say that fucking Goldman fucking Sachs cares about running it up? That's insane. You're going to tell me that our politicians give a fuck about running it up? That's insane as well. If you're a bear, you should be thinking they are going to run it up. They are going to go fucking straight vertical, and they're going to fucking fuck it all up. So get long until we get fucked, right? That's my point, I guess. Maybe that makes me the biggest bear out there, is that I don't fucking trust any of our politicians. I don't trust our banks. I don't trust our companies. You know, I just don't. So I don't believe for a minute that they are going to roll this market over until they've taken every last drop out of it. I don't think the politicians that are up for election this next cycle want to rock the boat. I think that goes for Democrats and Republicans. So I'm just not seeing this institutional political, oh yeah, we're going to take the market down right now before the next election, before I exit out side door left or right or whatever. I just don't see it. I just don't, unless there's something unknown that breaks to the public, like it has in the past, right? You start to see the cracks, but we're not seeing the cracks yet. Evergrande's not really the cracks for us yet either. We really need something that is going to collapse that we don't know about, that they know about, right? That they know they've broken the machine. And when they do know that they've broken the machine, they're going to fucking drive it straight up vertical so that they can exit at full profit, and then they're going to ride that bitch down. No, oh, sorry, I shouldn't be saying bitch, but they're going to ride this thing down to the bottom. That's how it's done. So start understanding that. That's how it's done, right? That no one loves you, no one loves me. They don't care about what you want and what I want. They don't care about some guy with $500,000. They don't care about a guy with $20 million. These people have billions, trillions on the line before they're going to pull the plug. All right? So that's my only point. That's my only rant today about the market crash talk that's been going on. And the Elliott wave is proving it right now, and that kind of shit. Until it gets disproven, right now, if you're only using 30% of your money buying any of these pullbacks or corrections, and as we've talked about ad nauseum, with risk and time, right? Adding more risk as we make these dips and adding less time and getting more aggressive for the next push up. It has worked for 2 straight years. And it worked before. It's worked total since 2008. A long time. So I'm not calling any tops around here. I don't think that you should be calling any tops. I don't think that you should be following anybody calling any tops right now. I think it's very dangerous. And even if you were to lose 30%, not calling the top, you still saved 70%. Whether that's in cash or some sort of asset that doesn't depreciate in a crash. Okay? Real estate, you fucking pick them. Even gold dumps off when that happens, right? We know that gold still falls off during a market crash. We know Bitcoin will fall off during a market crash. So you should be having some real estate. You should, if you want to have gold or you bought gold when it was low, that's fine. But in reality, just like Buffett, I'm cash rich to try to be able to withstand one of those events, right? And I'm only playing with 30% total. Sometimes I go a little bit deeper, I get a little greedy, and that's very risky for me to do. But in reality, if you don't want to lose your shirt, you can easily step into risk in this market and always be making money. And I have video after video after video on how to accomplish that. And that proved itself down here again, and this was an ugly one down here. And right now, for where we are, all these indicators, all I'm seeing is our same old trading channel, and we're at the bottom of it right now. So let's discuss my last video that I made where I talked about where we were. We were somewhere right in this area right here. And I told you that my price target is actually way up much higher. Is it 478 or 480, somewhere up in here. And I talked about we didn't have a lot of time before OPEX to get up there, and that as time passed we could dip below. But even in that dip, I talked about where that dip was, and I told you that the worst that dip would be on this trend line right here. And sure enough, the deepest we went, we tagged it. We tagged it to the exact number where to buy that dip. And then we were given another chance over here of consolidation for a push up on Friday. So my long thesis stays the same in here, and any dip buying that you can do has still proved itself. So since my last video, right, was started somewhere back on the beginning of the month, on the 3rd or the 5th or something, we're talking about we're talking about still being bullish. Nothing in this context here says that we are bearish. Nothing. We've been moving up. We've been moving up since October 20th, or even before. If you look at this big move over here, the banks and the institutions are long this market. That's what they are. They're risk on. That's what they are. They're not risk off. We wouldn't be up here. We wouldn't have recovered if we were risk off. So that's my context, is that we're risk on no matter what anybody's saying. That's where we did. We came up here. And we have OPEX coming up here. I did take a look at the seasonality charts, or a couple seasonality charts, one that showed presidential years and one that showed non-presidential years. And I know some people are thinking we're back into 2018, that holiday season. But I'm not viewing it from that viewpoint. I'm viewing it from an off presidential election season. I still believe that we try to make this run up here to 480 before or during OPEX. Between now and then, we're going to try to make this last push, or at least keep it above for the OPEX date, so that the banks and institutions can get their prints in. Maybe we fall off down here, but even if we do, at that point, the 21-day moving average will have curled up. So, and even if we come up here, the 21 and the 50 are going to move up back into this trading channel. So even if we come back down, we're going to tag them in a more reasonable place. Okay? So keep that in mind as time passes for where the price is in ES and SPY and the rest of the market. They're bringing these moving averages up into this trading channel. And then just to go briefly back, looking back on those non-presidential election years, we have a really good end of November, and then we have a fierce sell-off in the beginning of December, but then we rip into the end of December. So maybe we get 2 holiday runs this year. Maybe we make this 480 push, and then we make another push to 500 before the end of December. Now, I do have some concerns, because I do follow some Elliott Wave guys that are saying we're going to get that 5th wave in some point in 2020, or excuse me, 2022. So there are going to be people trying to exit their longs early this Christmas. If everyone's saying we're doing a Christmas rally, the question becomes, does it grind up into the 23rd or the 31st, or does it start selling off before that 17th? Everybody's long to the 17th of December, which is concerning. You can't have every Tom, Dick, and Harry and Mary up on the same calls, right, or puts, right? When everybody's long and everybody's short, we know what happens. So I do have some concern there if it takes all the way to the end of the year, or maybe even into January 15th. But we'll deal with that later. But for right now, this market is long. And if you play properly, you should not be blowing up your accounts. And if you're going to be bearish, we're always talking about going back to that. I'm bearish 10% of the time, 30% of the time. The SPY, specifically this index, is built. The ES, the S&P 500, the SPX, it is built to go up. The companies that are put into this index are picked because they perform. They're expected to perform. They take companies out that are not expected to perform. This is the wrong. I mean, if you want to short like Tesla or Apple or something else like that, or some company that's got bad news, that's one thing. But when you start trying to short the SPY, it's real hard to do, because it is built to go up. It's built around some old guy named Bob that lives out in Chicago's pension plan, right? It's built around all these different things. It's built to go up. That's the job of the SPY. It's not built it is built to signal where the market is, like the Dow is, right? Where the health of the market. But to try to short it for any length of time for me is not just a challenge, but hard to be proclaiming with 1 million followers on YouTube with market crashes coming. You're going to lose. You are going to fucking lose. You're going to lose. Mike Burry lost for years. And even when he won, he would have won more being long during that time period. No one talks about that shit. They say, oh, look, Mike won. But what they don't talk about is how much he would have won if he had been long during that period of him being short. You know, if I was liquid enough, I could be short as well until this thing crashes. Or you could be short, but you and I are not. We're retail. We have finite resources, and we need to make money where we can. And if we're only risking % of our money spread out, right, over the risk of a downturn in the market, we shouldn't have any problems. So we should have some capital invested somewhere. If it's in real estate, if it's in hard cash. I mean, Buffett is great on this, right? He keeps a ton of cash on hand at all times just in case this happens. Another point you could do would be to just buy yourself penny puts for a quarter. You buy the dirtiest, cheapest ones you could find. If you're doing a trading plan for yourself and saying, I've got $100,000, I expect to make another $10,000 this quarter, you're going to spend $1,000 on some cheap puts 3 months out. That's what you're going to do. If you're really wealthy, you shouldn't even be buying this market. You should just be selling puts. Right? Anyways, I'm not going to go down that rabbit hole right now. What I'm going to talk about is the importance of where we are. And this is the importance. In the last video, I talked about going to 480. It is still valid right now. It is more valid than it is coming down. Also, I talked in the last video about this line right here. I said to you, if in any possible chance that we come down and retest this line right here, this is your dip buy opportunity. And we had that dip buy opportunity in the 10th. And then on Friday, you had another dip buy opportunity. And that was to push up. So you've had 2 dip buys. We're still looking to go to 480 before OPEX even gets here. And we already know that we can throw 90 handles in the board in a week. We got a week. We know we can throw 90 on them. We know we can take them off too, heading into OPEX or even the week after OPEX for that Monday. We know we can burn them off into even this Monday after. So we know we've been here before. We know we can do this. Everything is still saying bullish. I want to bring you something even closer. On Friday, I was posting about if you were short, not to be short into the weekend. And then sure enough, you saw sellers being absorbed in this area here. And we curled over and rested on top of this pennant here. This was a bad look at what, 1800, right? This was a bad look at 6 p.m. You knew that we were finding some support. Futures, or not what futures, but after hours was placing it above to see what we're going to do come Monday. If there was no bad news over the weekend, we're probably heading up. All that news that you saw about Evergrande defaulting over the weekend came from a source from the Express, the Daily Express. That's a bullshit shit rag from the UK. You can't trust news from those people. You have to be trusting news like that from good sources, not Business Insider. You need to be getting them from the horse's mouth. You'll hear that shit on CNBC. You'll hear it on Fox Business. You'll hear it on the New York Times. You'll hear it in the Wall Street Journal. That's where you want to get news like that from. Okay? So we haven't had any of that news break over the weekend. They put it up above here. And what does that mean now for us? Right? Where are we at with that? With my last video, it's the same story. Nothing has changed, and that's the reason why I haven't made any videos, is because I'm sticking to this thesis. And so the bears are now looking for a couple things, and the bulls too, right? We're looking for the open to get the baton to be picked up at cash market and drive this up to 47.12. If you start seeing low volume tomorrow, you start seeing a push up. I'm going to grab that long to 47.12 or just below it. I am going to wait for the banks or the institutions to come up here, right? And I want to see them push it up past. I want to see some sort of arrest, right? Maybe another bounce, right? Before I start getting long, 2 or 3 bounces, we don't collapse, and then that push up that goes up to that 4,800 up here, right? So I want to see, oh, wait a minute. Get rid of this. We can leave that dot there. But I want to be seeing, I want to be seeing this quick consolidation, or we break right through and keep moving up to tag this 480 between now and end of week. This is where your weekly calls can be worth some serious money. You could get maybe 0 dates for tomorrow if we get a low volume squeeze up. If shorts start panicking tomorrow, this is easy. And then maybe in this zone right here, you grab call weeklies to tag out at this 4780 or this 4800. I'd probably get out a little bit lower, right before 4780. I'd probably pull the parachute and wait to see if we start to sell down. You're going to hear bears talk about this is going to validate even more that we're coming back down to the 21 or the 50 and that the fall is going to be doom and gloom, right? Well, in reality, at this point, the 21 and the 50 are going to move up into this channel. And so that pullback is going to be a sweet ride down. We'll grab it, and then we'll take the next holiday run after Thanksgiving into Christmas. We'll get 2 nice, beautiful pumps. We'll get a couple nice up and down movements between now and end of year. And this is where all signs are pointing. So I'm sticking with this thesis that I have here. It's been looking good here since way back here in October. Is there some grand plan of a bull trap way up here? Because the fucking bull trap started where? 4,400 or something? I'm not seeing that bull trap anymore. So what I'm really seeing is we're going to go up to that 4,800. And we're probably going to make a run for that 5,000 end of December, early January. I do have some issues with everybody being long into December 17th. Maybe they set us up to dump it and then run it up into mid-January. That's possible. Or we do have a market sell-off panic before end of December ends, because everybody knows that the market's going to go down in 2022. So there is some risk as we get up here. But for where we are right now, down below here, this is the buy the dip. We talked about this last video. This was your opportunity. I don't know how much more I have to say on that. I did post a bunch of stuff on Twitter, stocks that I'm long in. There was rotation last week. I would be staying away from individual stocks. You have noticed that some of the big cap names that run our indexes, they'll fire one off one day or for 3 days, then they move on to another one. You don't want to be getting caught in any of those stocks. I'd be running the indexes all the way up, right? You saw IWM is very bullish right now. Even if we were to trade sideways, if you're a bear or if you're a theta guy, it wouldn't surprise me if we traded sideways down into OPEX and then make a push to 4,800. That's possible as well tomorrow. If we don't find banks picking this up tomorrow, shorts are still fucked in here. Longs could be fucked in here. They could collect all this money, thank you for playing, and then make the push up to 4,800. But the bear thesis of us coming down is over for me. At least for me it is. I'm going to get aggressive on this, and I'm assuming everybody else is as well. So I'm going to be getting aggressive in here. If we trade sideways down below, I'm still aggressive. In no way, shape, or form am I in any way bearish from now into December. Okay? So I don't know what else to say to you. This is my next video. If you want to start getting bearish, you want to see how low you have to get bearish over here? Like, you need a break below like 46, or no, you probably need a break below somewhere down here, 46, 20, 75. Even down here at this point, all this is still open game. You're talking about 46, 32, 46, 50, what was that, 50 handles? No, yeah, I think it's 50 handles. We could drop 50 handles right now and still remain bullish right now. Okay? So we are not in any way, shape, or form, in my view, bearish. And most certainly are we not market crash bearish right now. And I don't know, when I see bearish, market crash bearish, I want to go back to some crash where we lost, I don't know, 1,000 points, something stupid like that. That's what I want to be seeing. I don't want to see this slow rollover shit, this Elliott wave stuff until this wave 5 with an extension, with all this other nonsense. We're running hot, and we're going to continue to run hot. And don't get caught as we run hot buying that top. That top is going to be, and there was a big trader that said that. There was this trader that talked about you have to be able to get aggressive, and that straight up vertical line is coming. You don't want to be buying that top. We're not at that top yet, in my view. So anyways, good luck this week. I hope if you're a bear and you follow me on Twitter that I did post for 2 or 3 times saying I wouldn't be short into this weekend, that there was no gap down coming over the weekend. This doesn't look like a gap down situation to me. I hope you didn't get caught in it. Even if you're a bear, I do love you guys. I don't want you guys to get fucked. I want you guys to make money. I want you guys to take all my money and drink my milkshake and all that kind of stuff. But beware that 70% of the time you should be bullish in this market until we're proven otherwise. You'll know it. Unless you didn't trade last March. I mean, I guess that would be the last big one, right? Last March, or 2020 March, was when things got real ugly real fast. And even then, most people knew it was coming. So, and even if we do crash, the rides up are going to be more. I mean, that's the other thing. One last thing before I go. Puts on the SPY are 1 for 1. Sometimes you can make 200%, 300%, 400%. But as we're going down, every support or spike that comes into play prints better and higher on the way back up. So let's say we do fall off a cliff one day. You're looking to grab any bounce. Those bounces are where the actual money's at. So I don't know. I don't know what to say to you guys. I love you all. I hope you had a great weekend. I look forward to trading with you guys this week. One last note is, over the years, I've tried all kinds of different. I'm always harping and ripping on people that are selling subs and selling this and selling that, selling doom, that kind of stuff. I say that because I've tried a lot of these subscriptions over the years. I've subscribed to trading classes, and I've subscribed to different options flow and order flow. I've subscribed to news, squawk services, you name it. I think every once in a while I'll find one that I like the most. Like I subscribe to Flow Algo as a tool that I use. I've subscribed to every flow service out there. For me, that's the one that works best. I don't have any. I'm not recommending that you choose them or not or whatever, but for me that works, right? I'm trying to save you guys some money out there. So if I found one more a new Discord that I'm in. It's very pricey, but if it pans out, if I'm making good money, I will tell you guys about it, but I want to make sure it's legit first. So there'll be more news to come on that down the road. And then I think that's it. I think that's all I got for you guys this week. Keep your chins up, make money. That's what we're here for. If you lost money Friday into tonight, heading into tomorrow, if you held puts over the weekend or something, there's still chances to make money on Monday. Don't get too frustrated, okay? Good luck, and I'll see you all on Monday.